Looks like the Fed giveth and taketh away, as U.S. stocks erased early gains from Friday, with the market tumbling in the latest U-turn for equities following a volatile week of swings in both directions. On Friday, investors also took in earnings reports from banking heavyweights JPMorgan Chase, Morgan Stanley, and Citigroup. The banks generally reported profits skidding in the quarter and also warned of a slowing economy. But the main event of the week was consumer price data. The CPI reported showed hot inflation, with a reading of 8.2% for September. It seems as though the political stunt and stupidity of draining the Strategic Petroleum Reserve didn't work, but now the U.S. taxpayer will be stuck with a sky-high bill to refill the reserve with much more expensive oil. And while it may seem the markets are establishing a bottom, given the scale of the decline since the August peak, that doesn't necessarily mean the worst is suddenly behind us. Not when inflation is so stubborn, the labor market so tight, and the Fed so intent on more aggressive hikes. Two charts today, beginning with our old friend, the volatility index or the fear gauge. And as you can see in the upper left, the symbol is $VIX using stockcharts.com, and this is the 2-year weekly. We continue to look at this dish bottom here and the move on up with these higher lows stair-stepping on their way up, and then the ceiling somewhere around 35 at this point in here. So it looks like we've bumped up against that 35, and we've got some consolidation here, so I think we should be rolling over, at least in the midterm, and I would say that this will take us at least a few weeks, if not more, perhaps to come cycle on down here. I think that's the probability. In this market, anything can happen, so no guarantees, but I think the probability is that we top here, roll on over, head down for a few weeks, but we'll have to watch to see if we set up another stair step on the way up. Again, we're moving closer and closer and closer to that pinch point. And so watching us move and evolve toward that pinch point is going to be very important, because either we're going to explode on the upside or on the downside. And you know what happens if we explode on the upside? That means the market goes down. But if the VIX can move on the downside and break below this imaginary line moving on up here, then the market may have a longer term rally. All right, let's go to our charts. And sticking with the 2-year weekly theme, we're looking at the spiders, the SPY, and the close on Friday, 357.63. Now, we bottomed and based in this area, but we came on down after reflecting up here. We came on down, and looks like we're bottoming and basing at a slightly lower level. However, looking at the oscillators, let's pass up volume, into the MAC, you can see that hopefully if we bottom and base in this area here, we may have a slight divergence with this low being lower, and maybe just a slight trend upward. You can see though here in the histogram that the trend is a little bit more pronounced. Hopefully, if the histogram continues to bottom and base in this area, we have, I would say, several weeks here before we can bottom and base and actually turn on up. So if that happens, then we'll have an upward trend. Looking here in the price rate of change, pretty much the same thing. Actually, this is even more pronounced with that move on up. We're near that zero line, so we're definitely strengthening. So divergence in many of these oscillators. A little bit of divergence here with the RSI, a moderately weak 32.24 reading, but improvement nonetheless. Now, we have a little bit further to go before we get to that midline or 50, but I think it can make it there, but it's going to take a few weeks. Same thing here with the stochastics. They show we're still on the downside. So there's a bit of a mix of indications from the oscillators, some showing improvement, this here stochastic showing maybe not. The Williams also is perhaps showing maybe not. At that very negative 99.10, it's in the doldrums, but I think it's going to pop on out of that oversold territory and head up. But again, it's going to be a while before it makes it to that midline or 50 line, and that's going to take a few weeks perhaps. Moving back up to the price chart, one last look, and I know you've heard it before. Be patient. And while you're patient, stack some cash. There are opportunities. Stack the cash and prepare. And for today, that's ChewDog Charts. Thank you.